Okay, so this trade was taken today, 18th of April, on an intraday basis, and the stock name is Berger Paints. And if you see the previous day daily chart, the previous day daily candle already closed below this swing low, and this is on a closing basis. And so the next best closest drawn liquidity is this swing low, but for safety I have taken this one. This is kind of like equal low to me, and so the next drawn liquidity is this one for me. So now we will not jump into the trade. We will first see what is the reaction of price in this area. Is it going to fall further, or it is trying to react from here in opposite direction? So that we will see in the real time, in the actual, I mean, on 18th of April in the morning. So this was the today's scenario. So as you can see, this was the drawn liquidity line, the first one. So price has given some reaction and then suddenly falls, and so creating this fair value gap here. So after that, we were waiting for the second fair value gap, which is this one. So our first trade was like this, from here to here, keeping our stop loss right below here. But as you can see, this was a stop loss. So actually, what I did here is I was looking at price, and right at that moment when it closes above the fair value gap, I exited. So I didn't wait for my stop loss. I just closed the trade when it gave us a bullish candle over this fair value gap on a closing basis. So I exited here with a very small loss. So then I was monitoring the movement of price for the rest of the day. So price was like consolidating in this area. In this area, it was consolidating, and then after that, it takes the buy side liquidity here. So this was the buy side liquidity taken here, and then falls. So creating a market structure shift here. So instead of waiting for this fair value gap to fill, I just simply shifted to 3 minutes time frame, and using this market structure shift and this fair value gap, because at that time the market was in real selling mode. So to me, it seemed that it will not reach this type of order blocks here and only just sting into the fair value gap and then go down. And as you can see, exactly the same thing happened, and I entered from here, keeping a very small stop loss right here, and target was here. So as you can see, within just half an hour or so, we got the target. So this was another example of power of 3 setup. So this is our accumulation state, accumulation up. Then this is the manipulation. This one is the manipulation. That is, price is taking the buy side liquidity, and then this is the distribution. So this is a power of 3 setup also. Of course, we were not paying attention to that. We were just taking the trade based on the market structure shift here, market structure shift and strong displacement. So based on that, we were taking the trade. So what did we achieve here? First of all, actually in this trade, our risk was 0.5%. The first trade. So, but as I describe here, I was not waiting for stop loss to hit. I just exited here when a 5 minutes candle gave its close just above the fair value gap. So I took a loss of about 0.2%. So minus 0.2% was the loss in this trade. And what was the gain in this trade? So since this was a loser, I immediately reduced my position size and risk was minus 0.25% and profit target was, as you can see, 3:1. So 0.75%. So this has given us plus 0.75%. So net is plus 0.75% minus 0.2%. That is how much? Plus 0.55%. So this was the net gain for the day. And this was the trade. Thank you.